You have to have an expectation, a reasonable expectation. You can't just well, I got a gut feeling it's going to go here. It's going to go. No, it has to make perfect sense technically by the way I teach you institutional oral flow and where it's likely to go to. Where has it been? What stops has it just recently taken? Who is in control right now in profit? How can they be harmed? Those are the questions you need to ask yourself when you're looking at price. Because we don't have that weekly expansion where it can draw to a very specific level on the weekly chart on that weekly candle, then we are immediately in low probability. So now that means we're in a scalper's market, because also I mentioned that daily range, it needs to leave that. Not just poke its head above it, it's got to leave it. Then sentiment will shift. And that's all I care. I don't have my heart set on the ES going higher or going lower. I don't care. But I will submit to you that we are going into a seasonal tendency for May going into the middle of June, where it, not all the time, most time, it drops and goes lower into that mid-June time period. So I'm kind of like tipping my hand to you. I believe it's likely to go lower if we're going to only factor in seasonal tendencies. So if I'm going to forecast for you and share my opinion going forward for the next couple months, I believe that ES will be lower if it follows its seasonal tendency. Something can happen, obviously, that can upset that entire thing. And what we've seen in the last 3 years, they're saying UFOs and aliens exist. So anything can happen, folks. Anything can happen. It's Looney Tune land, and you have to be careful. You have to be very, very careful. And I think that's what's being measured in what price is doing right now. Like, there's so many things that are going on, not just in America, but in other countries. And risk is elevated, very, very high. And big money, deep pockets are not in a hurry to assume new risk right now. And that's just investing 101. I mean, you have to have some measure of institutional sponsorship for the market to want to move, not because it's the buying and selling pressure, but there has to be some measure of sentiment to allow for this dance, okay, between liquidity providers and large order flow. That has to be there. And right now, there's a vacuum. That's why you're seeing price behave like it does. Short little runs, which takes us to that list again. For high probability, what did I teach you when we were doing the live sessions? What constitutes a high probability 5-handle run? And I think that's the low hanging fruit objective. Can you use what I taught in that model to get 2 handles and 3 handles and be done? Yes. But the chances of you as a new student or a new trader being, well, disciplined to just stop when you get there, have a limit order to get that 2.5, 3 handles and stop. And there's nothing inherently wrong with that. So, I mean, you hear me talk about 5 handles, minimum 5. That to me is a goal that you should strive for. You won't hit it right away. You'll grow into it and you'll outgrow it over time. But to me, I think that's a reasonable target for someone that doesn't know how to trade, that's never been consistent, that you start aiming for that. And if you do that, that's fine. You'll outgrow it eventually, but you can make a career entirely off of that. There's nothing wrong with just doing 5 handles. There's nothing wrong with you if you can only get 3 handles out of the 5 you're aiming for all the time. If you're simply, I'm going to move a little bit further down where I have my RV parked at. They have their landscaping crew in here. They're going around with their little weed whackers and they're approaching me. See, you can hear them. So we'll drop it a little bit deeper in. So when I taught you on the live sessions, and I've also taught it in lectures in the Twitter spaces all over the last few months, high probability 5-handle runs need to have what? It needs to have a range that offers how many pips? I'm sorry, not how many pips. How many handles? This is a way to test yourself. If you're following along on Twitter, how many handles does the range have to potentially deliver for you to get a high probability 5-handle run? 10 handles. So if the price run that you're looking at, anticipating, you want to see if it can offer you 10 handle total movement. Not that you're trying to get the full 10. You can over time grow into that. But I taught that it needs to have a range to offer at least 10 handles. Now, with that in mind, let's think about this for a second, folks. We have had what? This dude. I knew he's going to come here and talk to me. I got to roll these windows up. Start to look like I'm a little bit more antisocial. So we have low probability because the weekly chart doesn't have a clear draw where it can go higher or lower for a specific level. So right away that we're in low probability. And we are in a trading range on that daily chart where we have seen wicks and tails both up and down. So we have a balanced price range. Think about it like this. For those that are in relationships, okay, say you're married or you're in a long-term relationship. When there's no arguing and no fighting, no chaos, it's boring, right? That's exactly what you want in your relationship. You don't want chaos. You don't want fights. You don't want arguments. You don't want anything like that. You want everything's balanced. And that's what you're seeing in price action right now. In ES, in NASDAQ, we are in a point of balance. There has not been anything introduced that caused an imbalance. Look at that. Look at the range I showed you on the daily chart for ES, that shaded little area. I tweeted it this morning again. Inside that range, we've seen expansion up and down, back and forth, back and forth. Now imagine that range was an empty space and you had a crayon and you were 5 and 6 years old again, and you were instructed to color that in. That box that I shaded is essentially been colored in, both up and down entirely. So it's balanced. Price has traveled up and down in that range, both ways, multiple times, multiple days. So where's it going to go next? I am submitting to you, and I've said this last week, I don't have a clear indication where it wants to go. So immediately that checks the first box. I am not in high probability conditions. So I'm not live streaming. I'm not going to sit on Twitter and call levels that I know that's likely to not pan out. I'm not going to feed the trolls. They're having a heyday with the 2 days I said, I don't know what I'm doing, and this is what it is. Let's just go out here and spend time together. I don't need to spend every single day to prove the point that I've already taught, that if it's low probability, we're at 50-50. And I don't want to operate in 50-50. You shouldn't want to operate in 50-50. Now, also, no weekly draw. It immediately checks the box. We're in low probability. We're in a trading range. So it's in a balanced price range. We don't know where it's going to go. Now, you're also in a scalper's market. So right now, you have 3 things in that list for the criteria for high probability. Every single one of these are checking the box that you should not touch it. It's a rattlesnake. It's shaking its tail at you. The Desert Guide, ICT, told you last week, we're in low probability. I don't know what I'm looking for. We'll see what we see on Wednesday. And did I come back on Wednesday? It was happy trails, man. See you later. Hammer down. I'm going down the road. I wasn't chit-chatting with you. Every time I stopped, I talked to a couple of my private students. And no, I'm not going to come see. A lot of you are saying, hey, you're in Florida. Come by. No. I'm not prepared for that. It's not that kind of trip. But now look at the price runs. How many of the price runs that you are trying to partake in, how many of them had the potential to pay out 10 handles? Uh-oh. Now the list grows even larger against you. So right away, it should make perfect sense. This tapestry that I've laid out here beforehand, this is a do not touch market. But ICT, I saw this guy on YouTube and I saw this guy on Twitter, and I'm inside this guy's Discord and he's doing this and he's doing that. And that's wonderful. Well done. If you want to learn from them, go right ahead. I'm not stopping you. I'm not holding anybody hostage here. But if I'm going to teach you and I'm teaching you a model with rules, what type of mentor, and what type of sense would it make for me to do things outside the model and the rules I'm teaching you? It makes no sense. What growth would come from learning rules that I myself wouldn't even apply? If the market's telling you this, and that, well, how's that fit with the model? Does the model say we're in high probability conditions? Hammer down, get in here and start looking for setups. No, it's checking every box not to touch it. Don't touch it. And there will be setups. There will be setups that pan out that I won't be a part of. For me to sit down and educate you and have the charts live and say what I think is going to happen, I have to have everything in alignment. Otherwise, I'm going to look like anybody else out there that has no idea what they're doing, because the market's going to perform how the market's going to perform. I have no advantage when those things are occurring. So I have to excel when I know everything is in my favor. It needs to be one-sided. That doesn't mean a trending market. The market needs to be poised to move in a specific location from the weekly chart where I can see that clearly. Okay, I have my bias. I'm going to operate just in that. I'm teaching you how to do that. And that way you can go into the marketplace and study price action with that mindset. But some of you, and if I'm going to be fair and honest, I think it's the majority of the new students, you don't have the benefit of patience. You don't. I didn't have it when I first started. Don't think that I have this patience of a saint. I don't. I'm very impatient. But in this, I have to be. I have to be. And you're going to have to be as well, or you'll lose your money. You'll be frustrated or quit. And if you can't develop patience, it's probably better for you to quit. You'll save yourself a lot of pain and anxiety and anguish trying to do something you're not equipped to do from a personality stance. There's going to be people in this audience that meet that, and you'll never be able to trade. Not because it's my stuff or anyone else's stuff. There are people out there that are not equipped to do this. They can't handle it. They don't like rules. They don't want to be disciplined. They don't have any responsibility. They want to blame everybody else for when they don't do something right. They push a button. They want something to happen. Well, it's somebody else's fault. That's why it happened. No. Listen to what I've been teaching you here. The market is going to perform in a manner that's less likely for you to see what it's going to do beforehand. So I'm submitting to that. I am not arm wrestling it. If it's indicating to me that it could go either direction, it's 50-50, why are you trading? Why are you trying to get funded accounts right now? Why are you trying to build your funded account right now when the probabilities are so low and easily come back and stop you out, frustrate you? And if you're new, and that's who I'm talking to, folks. If you're new, you don't have the skill set to observe when you're about to go into a tailspin, because someone that's seasoned, someone's been around for a while, they've had losses and they've had drawdown and they came back from drawdown. Drawdown's not the end of a career. You're going to have drawdown. That's always going to be a factor in your trading. Losses are going to come. 100% strike rates do not exist. But for a new student, for a new trader, when you experience that and you have already shown a lack of discipline and no control, the responsibility that you should have to say, I'm going to stop. I'm not going to throw good money after bad. You won't see it like that. Your infancy as a trader and no experience will make you feel impulsive. You'll be angry at the market. You'll personify the market. You'll make it an entity in and of itself that you have to do war with, when in fact you're warring with yourself, and you're going to go and do things impulsively, trying to get something to pay you back what you lost. And that is the loser cycle that everybody will experience. If they do this long enough, you will encounter that, regardless of who taught you, what you learned, what you used to trade with, whatever discipline. Everybody has that. And I went through it dozens of times as a 20-year-old, thinking that I was going to get a different result. And the only result was I did it faster in a more stunning fashion, blowing the account. And that's the same thing that'll happen to you if you don't learn how to be responsible. You have to be responsible. You have to have rules. You have to say, okay, I can't go here now. I have to stop. I have to do something else. And that's what I did. I literally, because I'm obsessively compulsive. I think you know that about me now. And given the opportunity to be on social media, see things that's going to drive me nuts, where I have to chase cars, folks. I'm like a dog. I literally can't help myself. So I had to completely take myself away from it. And I told myself I would do one Twitter space while I was out here, and this is it. I won't talk again until I get home next week. So long and short, we don't have high probability. If you're watching, Rockstar Roger over there on YouTube, and he's doing something or she's doing something and it's making money, that's awesome. That is awesome. There's nothing wrong with that. I'm just telling you from what I'm teaching you and the model and the rules I'm providing, there's a context that goes along with this. The smart money concepts that have to have smart money rules that you have to follow. We're not doing casino time. Okay. People go to casinos and people sometimes win. People buy scratch offs. People buy lottery tickets, and sometimes they win. Are you confident? Are you confident in this market climate right now, in the conditions that you're seeing in this market right now? Are you confident in your experience and the time that you've been doing it? Are you going to be able to control yourself? Are you going to be lucky? Are you going to leave yourself to the fate of luck? Because if you're willing to do that, you have not learned anything with the time you've been with me. Because luck is not a factor in what we're doing. I saw a student of mine sent me a message, said, did they break the algorithm? Or did we break the algorithm? There's too many people out there that knows how to do it now. And now it's changed. They've changed everything. There's a different kind of price action. When you're feeling that, what you're feeling is inexperience. Because the market will sometimes go in these periods where it just ranges and consolidates. There's nothing abnormal about this. It tends to happen. Okay. It happens. And I made a referral to how it kind of felt like you would see in typical July, the way price action behaves in July. July is a month where it can be on or off. But generally, the latter portions of July going into August, there's this time, not in recent years, because we had all kinds of upheaval and turmoil and things going on, which caused a lot of people to be fearful of their money. And that caused shifts in sentiment, in which there was much more movement in the summer months, which is commonly referred to, and I didn't create this term, but it's always referred to as the summer doldrums, where the market just isn't in a hurry going anywhere. And that's kind of like what this feels like to me. It feels like the behavior that a classic midsummer price action would look like. And you have to be very careful not to push real hard when it's trading like this, whenever it forms. But you have to have the eye and the observance of when it's there to just backpedal and say, okay, I'm not going to push real hard. Because market environments are going to shift in and out from high probability to low probability, and to periods where I've openly stated that if it's not giving me the indications of what I would look for in terms of price signatures algorithmically,